Hi everyone, hope you're all doing well. Today we're going to do a little bit of an update. We're going to do this on Mobico, or what it used to be known as National Express. So I wasn't actually planning on doing this update because on the Patreon at the end of the week I'm going to do an earnings review with it entering earnings season, and then I was going to look at some of the stocks that reported earnings this week. However, I thought, you know what, this is actually worth covering on the YouTube channel because there was a lot of things happened with the recent update in Mobico Group that I thought it was worth updating on the YouTube channel. So for you guys that maybe own Mobico or are interested in Mobico, hopefully this video helps you. Now, yesterday, share price action wise, the stock was down. It was down a fair bit, nearly, I think it was 9% it closed off. Today it's having a little bit of a rally. It has slightly started giving it back, but my reaction on the share price was I was actually quite surprised. I thought the update that we got yesterday would be the bottom in the stock. I looked at the numbers and I thought that's pretty much what we were expecting, and the fact that we are having improved guidance, the Q1 update came out and everything looked okay. The management made a few changes. I thought that would open up the market, like, okay, at least there's a bit of management change going on here after what has been a poor year financially. I thought the market would kind of like that update. Not that it would go up, but I thought it would kind of be like, okay, we were on an audit issue as well. Obviously the full year results were posted. I thought the market would kind of go, okay, let's sit back now and see what happens with the stock. But the fact that it then pushed to 52-week lows, I was quite surprised by, and I would not be too surprised to see the market maybe rally a little bit in Mobico, or some buyers do come in here, because I felt like the drop yesterday was probably a little bit harsh considering the results. However, the poor year that it has had can be seen that's fair enough. Obviously, when you have performed as badly as what Mobico have, you are not going to do well in the share price, and that's fairly reflected in the share price. But even though I told you like everything that's kind of just happened there in the last 24 hours with Mobico, I'll break down some of the key things that I took away from the last couple of days, or especially yesterday with Mobico Group. So first of all, we had probably the big change is the CFO. So it was announced that the CFO got the boot, and I thought, fair enough. I thought this was probably needed. When you are the CFO and you have brought out 3 profit warnings, and you've not managed the rebound in the restructuring and increased prices that well, I think that's very poor. So I think something had to be changed to get some trust back in the market. As well as that, there was a bit of a mess with the dividend. There was a bit of a mess between the audit issues. Yeah, there's been a combination of errors, and I think that for the market to maybe get a bit of trust in here, the CFO had to go. I think this is fair enough, and you can see why he had the boot. He's not had a good year. I have to say, I am very pushy for the CEO to get the boot. I feel like the CEO that came in 2020 probably should have done a better job. You look at 2020, that was basically a year that everyone kind of goes, we can't do anything at the moment because of the world being shut down. Same with 2021. But realistically, the CEO now has had 2022 and 2023, has had 2 years to kind of, obviously being challenging times, but to kind of put the footprint or the stamp on the business a little bit, and that looks pretty poor. So I would have also been pushing for the CEO to be changed as well. If we do have another poor year, I would particularly be looking at the CEO and saying, like, you have to go. But I can see why the CFO had to go, because 3 profit warnings, audit issues, the dividend mess. Yeah, I think this is the right decision. So yeah, I'm happy with that as a shareholder. Now, they did give financial year 24 adjusted operating profits to be in the range of 185 to 205 million. I actually think this is what they gave last year. So this is what they actually should have done last year, but now they're going to do it this year. And it wasn't until the back end of the year that they actually started downgrading this. So I will wait until like October, November time before I think that actually they are going to hit it, because it was that time where they started downgrading it last year. But obviously kind of shows that the business is kind of a year behind where they should be, which is not good. So we do need to see that happen. Now, from the numbers point of view, revenue growth was good once again, up 12%, but this is where it does get a little bit messy. Adjusted EBITDA was down, operating profit was down, profit before tax was down, free cash flow was about the same, debt was around about the same, but the covenant gearing was a little bit higher. Now, they did say they won 43 new contracts worth over $1 billion, and we've seen a few of them mentioned previously in there, but obviously good that they're still winning contracts. When we get into the actual operations of the business, the ALSA was actually still performing quite well. However, North America, big massive downgrade there. UK and Germany as well, big downgrade there. So yeah, the big weight on the business at the moment is this North America and UK and Germany part of the business. This is a big weighing down on the profitability. But the ALSA business is actually doing okay. So that's where we need to see a big improvement from the business at the moment. They said that the impact of the costs was 130 million, of approximately was 55% by driver wage inflation and 30% by fuel and insurance costs. Now, I've got to say, like, we know the driver wage inflation has been high, and I've got to say, like, I always thought, like, once again, we'll go back to CFO, I felt like they did increase wages by way too much. So that's also a bit of a big issue from the CFO point of view. But it said here that the lagged benefit of price rises from the UK bus and North America school bus, a reduction in the COVID support package, and the impact of lower energy recovery as well. Ultimately, you know, the driver wage inflation has hurt them massively, but they've got to pass this on to the consumer. That's what they've got to do, and I think they did talk about this a little bit later on, which you can see here. We're continuing to make good progress on pricing. In the school bus, price increased by 13%. This represents about 40% of our contracts and comes on the back of 10% rises achieved on a further 40% of the contracts the prior year. Noting, however, that there will be a lag before the price increases are annualised. In the UK bus, we agreed price rise of 12.5%, effective from July 2023. And in our long-haul coach business, we achieved full-year yield increase of 3.7% in the UK and 7.5% in the ALSA. And then they talked about some more cost efficiencies they're trying to do. But I mean, ultimately, they've got to pass these costs on to the customers. That's what they've got to do. It's basic. Like, if these costs have hurt them that much, you've just got to pass it on to the customer. And, you know, potentially they might lose a bit of business, but it's better to lose business but get the profitability from it up. So it's quite an easy business to kind of get your head around, that they've just got to keep increasing prices. And that's it at the end of the day. You know, they increase the prices, and yeah, I mean, the revenue might suffer, but which has been actually doing okay, as we can see here, but they've just got to pass it on to the consumer, not the profit. It looks really easy for them to do, and I don't understand why they haven't been able to do that yet. You know, they're increasing prices by 10-12%, but it looks like they've got to increase prices more towards like 15-18%, and just do it. Unfortunately, that's what you've got to do, and we've seen a lot of businesses do it. There's no shame in doing it. Just pass it on to your consumers. Now, there was a bit of a mention about the dividend here. I mean, this was another thing. Like, I don't know how the CFO and probably the CEO agreed about the dividend. I think that was like a rescue package on the share price. But even the share price didn't rally on when they brought the dividend back, so they had no benefit from it. And rather than bringing this dividend back, they need to be sorting out the balance sheet and paying some of the debt off. That's probably the main thing that they need to be sorting. So once again, major error from the management team. So yeah, don't focus on the dividend, sort the profitability out, and then pay some of the debt down. This was some of the impact from the COVID support they had. So you can see here in the financial year 2022, they got 131 million compared to 26 million. So obviously there's a bit of an impact that's going on there. Obviously they're on about potentially selling the North America school business, which obviously has been a big impact for them. So this is probably something that would be worth getting them rid of. And if they could sell it, obviously they could pay off some of the debt, which would be really nice. And it looks like there's been progress made there, which is still really good. We did get a Q1 trading update, which basically said everything's in line, but that's what I said last year. And then it got to like the last 3-4 months, and then we had like 3 profit warnings in a row. So I would not take this too seriously until the back end of the year, but I guess that's kind of positive here. But the other thing with like Mobico is that there looks like there's still a good business under here. Like, they're still winning contracts. You look at the revenue growth. The revenue growth has been really impressive. It's actually been higher than where it was before the whole coronavirus situation. The Revenue was about 2.6 million. We're now up to about 3 billion in revenue. So that's all the contract wins have really helped there. The problem is the profitability. We really need to start seeing the ramp up in the profitability. And we used to have really easy, good profit margins. 2, 3, 4, 5%. And realistically, the business only needs to get around to a good 2% profit margin right now. If you get around to a 2% profit margin, you're talking about a company that's doing 60 million in profitability. 60 million of profitability at 331 million market cap. The stock does really well from here. And you look at the EBITDA point of view, and they're on about EBITDA being towards the 200 million range. If they even close that this year, you're trading around 1 times EBITDA, which is relatively really cheap. The problem is they're just not doing it, which is the frustrating thing with this management team. It seems quite easy for them to do it, and there's a good business here, but the management team just don't seem to be doing it. And I don't want to sell because it looks very easy for the company to still make it into a good direction here. And if they do, the stock easily doubles from here. But it's and are the management team, I guess, are they going to deliver it? And that also comes from a point of view, like from a buying point of view, I can't buy either because in the last year, the management team's let me down. They gave me 3 profit warnings. They didn't deliver on what they were saying. If anything, I reduced my positions at the end of the year. However, I still own shares because I still think there's a good business here. I just feel like they've been so mismanaged in the last year that it's been frustrating. So I look at Mobico and I think there's a good business here, but the problem is that the management team needs to deliver, which they haven't done, and that's what we're kind of waiting for here. So yeah, the update was okay, but overall it's been a disappointing year. And the future, if they do deliver on the profitability they say they're going to do, it does look good, but are they going to do it is the big question. And until I see them do it, I can't really buy the shares in them at the moment. So I'm just holding at the moment because I still think it could end really well for Mobico Group, but at the same time, there's just things that the management team need to improve really. So I'm just kind of like sit back and see what happens at the moment with Mobico Group, and hopefully the management do deliver on what they should do. And very basically, they just need to pass these price increases onto the consumers, and the profitability goes up, and we all do well here. That's the end game here. So we'll see if they do deliver it anyway. So yeah, that's the update from Mobico Group, guys. Hope you enjoyed it anyway, and I'll see you in a bit.